It's about that time of day again. My name is Joseph. Tuesday evening, September the 5th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro tonight. Crude is bullish with a spike in range, which tells us to look for seller failures back below the range to the most reliable buying opportunities tomorrow. The S&P is bullish and trying to fill a gap left open for the holiday weekend, but we expect to see one more try from those sellers, so we're staying patient to buy their failure on Wednesday. Speaking of Wednesday, Nasdaq is bullish with a spike in channel, and the buyers are taking aim going back into the trading range where the whole party started today. Gold is bullish, but a two-day trading range is telling us to avoid buying these highs and wait for rotation back to the low where we can buy with more reliability on Wednesday. And don't forget about the euro. Euro's range bound with a triangle pattern this evening, which tells us to focus on failures using that two-try rule above the highs and below the lows while avoiding the middle on Wednesday. Get a great newsletter in store for you guys and gals tonight. We had a holiday weekend, which means we got some gaps left to be filled coming back from last Friday. I got some big charts. We got a little bit of news tomorrow we'll talk about in a moment, but some big opportunities with some big moves from today's session and, of course, setting up for Wednesday's session. Before we jump in, though, and take a look at the plan for tomorrow, I want to remind you, as I do every evening, the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this nightly newsletter goes live. Follow me on social, lower left-hand corner. Pick whatever your flavor of choice. StockTwits, Twitter, LinkedIn, Facebook. Whatever you like the most, follow me throughout the week for important charts, links, and updates. And don't forget to grab those charts. How easy is that? You guys always tell me one of your favorite parts about this nightly newsletter is that you can have all the charts from tonight's video on your computer. Follow that link right below the video tonight on the blog. And if you do one more thing besides watch this video tonight, make sure you grab that free pass. What are you waiting for? Why haven't I seen you yet in the trade room alongside of all of our members? Don't forget, grab that free pass. Come out and join us as a guest in the trade room. You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can guarantee you that. And you got any questions? I'm always here. Hit me up on live support. Get a great live support tool on the right-hand side of our homepage and here on the blog at Sideways Markets. Let's jump right in. You guys are busy people, so am I, and you're probably adjusting back to reality a little bit, right? So we'll let you guys get out of here a little bit early tonight. Tomorrow is Wednesday, September the 6th. Now, of course, real quick, we're coming out of a holiday weekend, right? Monday the 4th was a holiday. Markets were open, as I mentioned last week on the newsletter. Half day on Monday, right? So early in, early out. Heard from a lot of you guys too, and it sounds like a lot of you guys and gals had a pretty good day if you traded on Monday as well. As I also reminded you last week, right, with that holiday, important to take some time with family and friends. I hope you guys had a great time away from the desk. Back in the action here this week, everything's going to be pushed forward 24 hours, right? So we're usually on Wednesday mornings. The most notable impact on this is we usually see this inventory report on Wednesday mornings at 10:30. Because Monday was a holiday, all the major news in the U.S. gets pushed back 24 hours, right? So nat gas won't be until Thursday, right? The inventory report won't be until Thursday. A lot of the stuff that is usually on Wednesdays gets crammed into Thursday morning. And then, of course, we got the big jobless claims and such on Thursday, right? So we'll talk more about that in tomorrow night's newsletter, but just be aware some of the common Wednesday news events are now pushed back to Thursday, and you can pretty much expect that to happen anytime you have a holiday on Monday. Speaking of news for tomorrow, we really don't have a lot overall this week. All we really have tomorrow morning is that international trade at 8:30 a.m. We're going to hear from the Bank of Canada at 10 a.m., but in all reality, 10 o'clock is such an active time of the morning, you really don't need any extra volatility there. So really all eyes and ears are on that international trade tomorrow morning at 8:30 a.m. That will be the big headline news of the day tomorrow. Nothing in the overnight session to worry about tonight, and not a lot tomorrow morning except for, again, that 8:30 international trade. We're going to hear the beige book tomorrow afternoon. shouldn't be too much, shouldn't be too much of a market moving event tomorrow afternoon. So really, all eyes and ears are on this international trade. Now, a lot of gaps over the weekend too, surprisingly so. In low volume yesterday, we still didn't see those gaps filled. So the kind of the note for tomorrow is watching for a lot of these price action gaps, these closing price gaps that haven't been closed yet, coming out of last Friday. Don't forget, I'm going to go over the plan here with you guys tonight. If you want to come out and trade the plan with me, come join me tomorrow morning with all of our advanced members in our trade room. We open up at 8 o'clock Eastern time. Let's jump right in here this morning. Looking at crude tonight, we'll start with crude. We'll go to S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Crude is bullish with a spike in range after a strong run higher to start the fall trading season. One thing that stands out is the lack of any pullbacks on the way higher. That's why I call it a spike, telling us that only the aggressive buyers got into this move higher, leaving all the patient and conservative traders likely waiting for a deep pullback. This important clue tells us to expect a relatively deep pullback off these highs in order to attract enough buyers, right, to then send price right back up to retest the high tomorrow. Ultimately, this is nothing more than a fancy schmancy spike into a trading range. Now, you could look at this in a few other different ways. First of all, spike into a small range. In fact, I do like how that's drawn out, right? So overshoot into overshoot, that puts us below that trading range. So you could look at this as a smaller trading range, or I'm kind of blanketing it in here, right, as one big trading range. Most important factor about this is we have a strong move up. And anytime we have a strong move up, if you guys watch my nightly newsletter, we know looking for a two-legged pullback back to an area of support for retest back up to that high. Right now, the way that I see it at least, these big, bold green candles with barely any pullback, that tells us a lot of buyers are probably still waiting on the sidelines, trying to find a price to buy at a lower price tomorrow. So this big green candle stands out because you'll notice that big green candle, a little swing down there, that stands out around that reverse line at 58.15. That'd be a great spot there to be looking for the battle zone and a return back up to retest the high. Strong move up, two-legged pullback, back up to retest the high. That's the basic principle of tomorrow's goal, right? The plan for tomorrow. Another clue here is this channel. Now, for being such a strong spike higher, I got to give props to these bulls. They really held it together in that channel pretty well. There wasn't really any too dramatic overshoots. Sometimes these runaways, they overshoot the channel so much that it's just impossible to really keep it confined inside of that pattern. They did a pretty good job holding inside that channel. Anytime we see a bull channel, we always know we're looking left, finding prior swings, and again, looking for those pullbacks, using those prior swings as support, right, and making a run back up to retest the high. Now, on the most recent pullback to support at this 48.51 area, you'll notice here the buyers have tried a few times here now to go back and retest that high. So we can assume that, like I mentioned earlier, buyers are not excited about buying this high right now. Therefore, we'll start looking at the next swing down at 48.23. Now, one additional clue here on the chart is this trading range. Anytime we have a trading range in the chart, flat moving average, right, double tops, double bottoms, anytime we see a flat moving average, market start moving sideways, we now start thinking about the two-try rule. We're going to talk more about the two-try rule at the end of this video on the euro tonight because we had a range in the euro. I also recently did a video on our YouTube channel and on the blog titled The Two-Try Rule, so make sure you go catch up on your homework tonight and learn more about that two-try rule. The bottom line, though, is we're expecting to see once, twice, that second attempt from those sellers. That's the one we really want to incorporate with some levels of support for a nice juicy buying opportunity right back higher. So we know we're looking for that two-legged pullback back to an area of support for retest back at that high. I can do that with failure patterns. I can do that with trap patterns. I can do that a little bit more here once we know more information here. Oh, come on. That's the worst drawing you've ever done here, Joe. There we go. right? Use that trend line as support. These are all easy ways. Draw the trend line coming down. There are many ways we can look for our specific patterns, right? Failures, strength patterns, pullback patterns, trap patterns. We teach those patterns in our free trial, and we teach those, of course, in our advanced classes here at School of Trade. Lots of different ways in which we can buy this now in that battle zone, going back up to retest the high. But what if we go back to retest the high, right? What if we go back to retest that high? Then what do we do? Well, at that point now, we're looking for one of two scenarios. Either we're looking for acceptance or we're ultimately looking for rejection. One of those two scenarios will result in going back to retest the high. If we get rejection, we then look to go back to that range and keep buying off those lows, right? If we get rejection, in other words, if we go back to the top of this range, but instead of seeing buyers explode higher, we see profit taking and price pulls back off of that high. Now we know, again, we got that trading range, focus on that one try, two try rule, right, and back up in if we get some rejection on that tomorrow. Well, what if we get acceptance? What would acceptance look like? Acceptance will look very strong, right? A very strong move higher. If we see acceptance now, I always like to look for, because it's a spike higher, if we do see acceptance, look for a spike in channel. Look to buy that, right? Buy that channel, right? Look for a spike in channel. If we see acceptance, look for a possible spike in wedge. So we can draw this up here for us. Right, possibly spike and wedge, right? And of course, we'll try to buy the low of that wedge. Most important thing though is if we do see acceptance as we go higher, I always want to make sure don't chase after that move. I know it's human nature to want to buy as price is rising, but the best trades are always going to come buying as price falls, right? So look left, find some areas of support such as that 48.98. And I always like to, once I see price acceptance up through that high, now I like to look for a trap low, right? And that trap low will give me the opportunity now to buy that dip. All right, guys? So if we do see acceptance, we then look for that trap, buy the dip going higher from there. Last but not least, how do we turn bearish here tomorrow? There are three things I look for anytime we look for a market reversal. Strength, pullback, strength. I don't care where it happens. I don't care what it is, what time of day it is. It doesn't matter to me. But right now, we're not seeing enough strength right now back below that moving average. So the first thing is we got to see some strength. Then if we can hold a pullback, hold that pullback to the moving average. If we can see some continued strength from there, once we see continued strength from there, then we know the market is bearish. We'll then look for a new, usually steeper bear channel, and we'll look to sell the high of that bear channel, look to sell above the high of that bear channel, and of course the target is back down to retest that low. So remember, bull market, we're going to buy as price pulls back. If it gets a little bit crazy to the downside and the bears do take control, right, we'll find a new bear channel, and the objective is to go back and retest that low. Remember, strong move up, two-legged pullback to retest that high. Once we get back to that high, it's acceptance or rejection. We got our plan laid out for both acceptance and rejection tomorrow. And again, don't forget, it can reverse tomorrow. There's no reason why it can't. I'm going to stick to the buy side until the bears take control and you know what you're looking for tomorrow. I know I covered a lot in this video so far. Don't forget, join me tomorrow morning in the trade room and we'll do it together. Here we go. Let's keep rolling here over to the S&P and the Nasdaq. Both the S&P and the Nasdaq are looking at rollover here later on this week. It's telling me right now on the 7th and the 8th, today of course being the 5th. So later on this week, we are watching for rollover. This is the 9/17 contract. And of course, we're in September right now. So it's only a matter of time before this market rolls forward to that December 2017 contract. And that will take us pretty much into the end of the quarter and of course the end of the year. Boy, the first thing here that stands out right now is this bull spike in channel, which tells us the most reliable buying opportunities will be down in that battle zone, more specifically back below the moving average and around prior support levels. Now the session started, this is a great clue, session began with an obvious trading range, and this could be seen as the first try to leave that range. which tells us, to try rule, that sellers are probably going to try one more time to retest that low at 45.5. Day coming tomorrow. Don't forget all the major news that we normally get on Wednesdays, such as the weekly inventory report for crude oil traders, is pushed back until Thursday morning. I kind of like it better that way, to be honest with you anyways. So full schedule tomorrow. No major news tomorrow on the calendar. We got some weekend gaps we're watching out for. And don't forget those trading ranges we talked about earlier here on tonight's newsletter. Before I let you guys go, don't forget, if you want to learn more about how we trade here at School of Trade, if you want an invite to attend our trade room as a guest, make sure you join that free trial. I think it's one of the best in the business. And while you're here, don't forget, look at our beginner, intermediate, and advanced classes. There is a place for everyone, whether you're brand new to this great business of day trading or you're a seasoned veteran and you're still trying to find that consistent profitability you're working so hard for. We have a great spot for everyone to either begin and finish their trading career right here at schooloftrade.com. If you're watching the video right now on our YouTube channel, don't forget there are links in the description of that YouTube video. If you're here on the blog at Sideways Markets, don't forget to grab your free pass, and I will see you guys next time. Same place tomorrow. You got it, guys. Adios, amigos. Bye-bye for now.